You know, the news day is slow when Michael Burry makes the headlines. This time, he is talking about shorting the market. Burry is shorting the market yet again. Now, I've got a lot of data to get through. The main questions that continue to come up are, is this going to be an issue for Bitcoin, of course, cryptos, and the stock market? Is he seeing something that the rest of us aren't seeing? Is Michael Burry, the guy that did the big short back in 2005, as the stock market continued to climb, do we have to worry about what this perma bear continues to tweet about and put investors' money on the line? That's what's coming up in today's video. Make sure you hit that like and subscribe button. This is your home of macro cycle analysis, where we study the past to forecast the future. I've been doing this for over 15 years. Crypto, Bitcoin, stock markets, and real estate. Of course, the 15 years part comes from real estate because crypto and Bitcoin haven't been around that long. So let's have a look at that. We've got a ton of data as per usual to get through in today's video, looking at the stock markets and BTC. Is it holding the line? Is there a possibility that this is a new level that Bitcoin is forming a base above? All right, enough with all of the questions. Let's get into the data today. Okay, so what's happening? Michael Burry just shorted the S&P 500 or the SPY and QQQ. He's bought some puts. Basically, that is to short the market. He is expecting the market to go down. We've talked about the market going down. However, how big is he looking at this to go down? That's pretty much the biggest question here. Obviously, he's not going to give us his targets of where he thinks the market is going to bottom to, but here is how much he has shorted the market. So nearly, get that number right, nearly 900 million, nearly 740 million there for the NASDAQ. So QQQ is the NASDAQ. All right, so is it something to be worried about? Burry, famous for the big shorts, this is back in 2005, is bearish against S&P and the NASDAQ again. Now, as I go through this article, there is a lot that isn't disclosed, so it's hard to get an exact reading on it. I wanted to bring that up because this has obviously been going around the internet all day. I'm probably late on it, but nonetheless, I think it's interesting to talk about because of the reputation of fund managers, media personality, that sort of thing, that continue to put on these shorts in a rising market. So Burry rose to fame with his bets against the US housing market before the 2008 financial crisis. He's obviously got that movie as well. I love the movie. Really good fun to watch. If you haven't seen it, let me know in the comments why, but it's good. So there's a few things that we don't know about his short trade. When exactly was it? All we're hearing about it is in the news now, obviously, earlier this morning, but we don't know the exact date that he had the short. So potentially could have made some pretty reasonable gains to the downside depending on how leveraged the position is, or if it's just a spot position. It's basically, if he got the exact top and got out at the exact low so far, 3.8%. Probably not what you're looking for if you're investing into someone else's fund. Remember, the funds typically should be beating the stock markets, the baseline indices here at 7, 8, 9-ish, more around 7 or 8% per annum. So they're in it for more than that. We know that much. So if we look to the downside, that's where we're at, 3.8. We've pointed out somewhere around 6% being our 50% level. And we know from history, which I've got this chart here to get through, that markets typically do single digits in bull markets. And I know here some of the other end saying, well, this isn't a bull market, we're still in a bear market rally. I think it's time to get real with yourself if you think this is still a bear market rally. When markets come within single digits of tops, 5% like we have done at the moment, there you go, 3.6%, they go to new all-time highs. There may have been one instance in history that it hasn't. If you think this is going to be the second time that it doesn't make a new all-time high, okay, fair enough, bet on that. But what we've got with the data in the background, probably single digits to the downside. So it's not going to be that big move that I think they're expecting. If we get the double digits, a double-digit move, 10% from the top, takes us out to roughly 4170, still in a bullish setup. It's still in a bullish position if we get down to 41, 42. I don't think we're going to get there, but even if it did, it's still in a bullish setup because you got higher and higher lows. So it's still macro uptrend, major macro uptrend. This is a weekly chart on a 2-bar weekly swing. That's what this yellow indicator is here. It's our TIA GAN swing indicator. That's in the link. The link is in the video description if you want to learn more about that. Of course, come and join us over in TIA Crypto. There's a free crypto and economic report coming out tomorrow. So subscribe now so that it comes through to your email inbox. That link is at the top of my YouTube channel here. So that's where we currently sit with the S&P. The data in history suggests that we're not going to go to these big moves to the downside. So why the hell is Michael Burry shorting again? Like I said, he may have already taken some profits. We have no idea exactly where his levels are. But if the only thing we have to go by is the news, then he's probably bought the put options to short the market recently, but he has been wrong so many times. You can do a simple Google search, Michael Burry sell everything tweet or sell tweet. That tweet that he did back in March where he just says sell, and basically the market skyrocketed up from that point. Deletes everything, turns his account off, comes back, and then says that he was wrong to sell. Look at that. March 30th, 2023. I was wrong to say sell. Fair enough. At least he can live up to it. That's a huge thing that you rarely ever see in the industry. Rarely ever see people say that they were wrong. Okay, so we'll give him that. Anyway, I don't think it's an issue. And I'm just going by the data that we see from Burry himself. These are the tweets here. This is a really interesting chart here from Adam Koo. So great work there on Twitter. Burry's predictions. He said December the crash is coming in a few months. You had this. That was the biggest crash for that part of the bull market since 2009 to 2016. But in a percentage term, it is barely anything. This is it here. You can hardly see it. So we look back from the peak, that peak there to the low, 14%. It's reasonable for the stock market. Don't get me wrong, 14%. That's pretty reasonable there. But he's talking about a crash that takes the market back down to previous highs and potentially more, as in looking for this again. He's always looking for a GFC. Let's go back to more of his calls. May 2017, global financial meltdown coming. Wrong. Market skyrockets. Yeah, we have some pullbacks, but you can't stay in a position short in that period and watch the market just go completely against you. Even at the 2018 drop, the market only barely touched the area that it came back to when he made this claim here, May 2017, global financial meltdown coming. He's looking for a GFC again because that was his one major true win that we all know about. 2019, it might sound like I'm having a really huge go here, but essentially I kind of am. We're looking at perma bears. The data just shows it. Why be a perma bear when the markets go up over time? It's almost impossible to be a long-term bear. Well, it is impossible to be a long-term bear because you rarely see the markets go down over long enough periods of time to make any substantial amount of gains. And that's because the money keeps coming back into the system. Its bias is to the upside. I don't make the rules. I just follow the market trend and not be a friggin' hero to try and call a top all the time. Speaking of tops, bubble in index ETFs right there as the market broke out again. So one thing that is really interesting is that he seems to get the point just before the boom takes off. We've seen that here, 2005, don't forget that. That was the housing market crash. Where are we looking here? Over here, 2005. And then we get that boom period in the market. Doesn't look like much here, but at the time, it was huge. That was all people could talk about. I remember in that game, I was 19, 20, 21. That's when I was first buying my properties. Yes, at the peaks, because I was doing what the masses do. I thought the market was going to continue going up. I just started. I was a teenager, 19, 20. They're the mistakes I've made, and that's what I've learned from over time. Just called it. Market continued to skyrocket from there. Continuing on, March 2020 reveals massive bearish bet at the bottom of the market. The low was March 2020. February 2021, market bubble crash coming. Again, that was just before the market skyrocketed for the next 7, 8, 9 months up until January. Well, yeah, basically 10 to 11 months, January into that peak there of 2022. September 2022, basically the bottom, a couple of weeks out from the bottom. More failures coming. Well, you weren't wrong about that. We got the banking failures, but it was a higher low, and the market moved up from that point amidst all of that fear. January 2023, recession, sell. There is that big call here. There it is right there. There's your January 31st. Boom, market skyrockets from that point. So if there's anything to take from this, don't take that it's going to skyrocket from this point, but I think eventually we're going to get that skyrocket. It doesn't necessarily have to come tomorrow, but I think we're at that point where he's so fearful that we're about to get that move, like we've looked at, potentially later in Q4, maybe sometime later in October as well. So that's sort of earlier Q4. That's what we're looking out for a move to the upside again. I know it sounds crazy. I know there's still plenty of bears in the room, but just trade the chart. Trade the chart, people. Look at the price movement. It's up and up and up and up. And eventually, yes, it might come down, but year upon year upon year, the markets continue to go up. We've had a new all-time high every single year since 2013, even during the pandemic, even just made it into 2022 for the S&P, that is. So maybe 2023, maybe we just miss out on that new all-time high, but 2024, I'm pretty sure we've got a new all-time high coming again. August 2023, shorts SPY, QQQ. So that's it all there. Here they all are written out in typed format here. And basically, this is the big one there that predicted the collapse way, way, way too early. But he was around that peak just before the market really boomed. So I suspect he's going to continue to talk about these things over the coming years. And that's what we're looking out for over the coming years. A peak will happen, but we've got to go through far more speculation and hype up in the market before we get the collapse. People are still way too fearful to get a collapse. Tops form on hysteria, euphoria, craziness from almost everyone. 90, 80, 90% of the market. Tops don't form when a lot of people are still bearish. And you can basically just do some Google searches, go on media, go on CNN or CNBC, whatever those money shows are online or networks in America, and you see that the majority of people are still bearish, even though the charts are basically nearing new all-time highs. So 2005 problem here. Here it is, 2005. This is the Case-Shiller Home Price Index. The home prices kept going up into 2006, finally got the peak, then rolled over. That was the collapse there. So he's right in the analysis, but he's wrong in his timing. His timing is so far out. It's surprising how he still has money, or has other people's money to be trading with. Okay, so just keep that in mind as well. The timing was so bad that he was very lucky that he still had anything left in the short to be able to get into the short position and crush the market. Eventually, money goes to the smart players, and it seems like those numbers could be dwindling if he keeps up shorting the market in a rising market. There was a problem there as well with Tesla. He was shorting it here in February, and then the market took off to the upside. So February 21, you can see that right here. Shorts Tesla, February 2021. Tesla goes up. All right, moving on. S&P data that we were looking at, or said I was going to go through. Again, this is from Adam Koo here. I've just found these on Twitter. I don't know much about his background. This is just data that we are using. I don't know anything else about it, about him himself. Just focus on the data, not the people. All right, so 5% or more. We see this about 3 times per year, average length about 43 days. We've covered this before. It seems to be around that sort of 6-ish, 7-ish week period. Last time, this data only goes to 2020. So a few times a year, we get that 5% correction. 10% or more, about once per year. 15% drop or more, about once every 3 years. And 20% more or more drop about once every 6 years. Let's take a look at the S&P. Now, we have seen an update to those data points there. We have seen a 14.7%, we've seen a 21%, we've seen a 19%, and we've seen a 9.3% drop on the S&P in 2022 and early 2023. So you can reset these data points and say that this is all 2022 and 2023, about once every 3 years. So we got the 15% in 2020 and in 2022. So about once every 3 years, we got it. We got it once in every 2 years at that point, okay? So that's been done. Are we going to get it again a year later? Probably not. So I'm crossing out 15%. I'm crossing out 20%. Not saying it can't happen, but just looking at the data, it's unlikely that we're going to get those moves down. Remember, this is all leading across to Bitcoin as well. I know I'm a Bitcoin channel, but we've got to understand the macro game here to swing the probabilities in our favor as more macro investors in Bitcoin and crypto, waiting for those key times to execute on our plans, get into the deal, and watch the market. Not be fearful about all of the news headlines that continue to come through day after day after day. You're probably seeing it on the channel, how we're going through each of these new bearish narratives that pop up day after day, so that we can stay focused on the task at hand. Pretty much the hardest thing in this game is your mindset. They say it's trading. What's the plan? When do I buy and sell? It's just get in at the lows. Buying at the lows is the easiest part, and then don't fuck it up along the way. Pretty much, if you want to have a simple plan, just don't fuck it up along the way with all of the bearish news, because the markets typically go up over time. Look at what happens at the bottoms. We called it here June. Then we had the second low here in October. Then we had this higher low in December into January. And then this was the big one that I went all in. That was my big long in March because of how fearful the news was. It's so much easier to get in at the lows than it is to get out at the highs. Just hang in there and don't screw it up. Okay. So the 10% about once per year is now the time. Look, we've looked at it here. I don't think it's going to be the time. I think perhaps we may have seen those times back here where we had a nearly 9% drop. Potentially, that is the point there that we see. I think we're still probably more in the game of max 9%, probably somewhere around that 7, 6, 5-ish% to the downside, and then we just got to wait it out until we get the move to the upside. So cross that out for me, 10%. Probably somewhere in the vicinity of 5 to 7-ish%. Remember, this is the pattern that we are looking for moving forward across 2023 for the rest of 2023, basically a bouncing onto BTC and the level. Thank you for holding in there, guys. Hit the like and subscribe. We're getting to this point now where it seems like Bitcoin is laddering up here. We've seen a rise up in the Dixie, so it's at 103 now. Had a peak out here at 103.45, and to our 50% levels, and I bring this up because this was getting pretty hot and heavy to the downside, and you got BRICS and all the big news saying that the dollar has to collapse, but we've just seen a rise in the US dollar. So the 50% level is now at 107 if this thing is to rise back up and retest that. It's got to overcome these tops and the next top before it can get to 107, but it's still in a bearish position because it hasn't broken over 107. I bring that up because even while the US dollar is increasing, Bitcoin has been relatively steady for the last coming up to a month. That was the drop there on the 24th, and you can see the price has basically remained above $28,500 that entire time. And it seems like we're stair-stepping our way out at a very slow pace. In the background, with all of this bearish news going on, we have the S&P continuing up. Obviously, it's taking a breather now. But you can see back in January of 2021, a nice low there at 28,700. Basically, this is the theory that we are building the base for BTC longer term. Then we had the very significant low there in June of 2021. That was after that May collapse. We did that live stream. We had 20,000 people online. I think there was over 100,000 views all up on that video. That was absolute mayhem times. Let me know in the comment section if you're around there. Give us a little love heart so I can run through and see the old OGs from 2021. And then you can see the base that was forming before the CFI breakdown in June of 2022. So you got the June 2021, you got the June 2022. We've seen June here break through the 28. So June's a reasonably good period there, and it seems like we're forming a base. Don't worry if there's any sort of wicks here. What you want to look at is the bodies. I've turned it on to candles today so you can see the colors there of the bodies of the candles that continue to form the base above that $28,500 level. The key level to break for me is $32,000. So Bitcoin can continue to form these bases on the way up. And I think once it does break through 32,000, we've got some pretty good room to run to the high 30s and somewhere in the 40s as well. So this has been a long wind up of levels above 28,500. Stay tuned to what's going on here. I know it's pretty boring and not much is happening, but these are the easiest times to remain with the market and to set your positions, because you don't have all the emotions that are flying around like we did in mid-June when the market took off. And then you got to get over the emotions, you got to get over the party vibes, and then just get back to business and have a look at what's going on in the markets. That's what's going on in the markets, guys. Hit that like and subscribe button, and don't forget to subscribe to our free crypto and economic report, which is coming out in 24 hours time. See you guys at the next video. Have a good one. Till then, peace out.